Hey guys, and welcome back to my channel. The Bank of Canada just announced another interest rate increase. We're going to talk about what that means for the real estate market in this week's video. Real quick before we get started, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. I also make content designed to help you make your move in and around Vancouver. So if that sounds interesting to you and you want to chat with me one-on-one about your situation, you can book me in the Calendly link below. Subscribe to this channel regardless though, so you don't miss a future video. All right, so at the time of me filming this video, we are fresh off the announcement from the Bank of Canada that they are raising the interest rate 0.25%. We're now sitting at a Bank of Canada key rate of 4.75%, a prime lending rate just under 7%. So going into this last rate announcement, it was kind of, by the end of it, 50-50 in terms of whether the bank was going to raise the rate, whether they were going to stand pat. We're coming off higher than expected GDP growth in Q1 of this year. So there was a lot of talk recently that rates may increase, if not in this last meeting, then sometime at this point, sometime in the summer. So we're going to talk about what this actually means for the real estate market. Now, if you've followed my channel for a little bit, a couple of videos ago, I said, I was feeling a little bit of a changing of the tides, a slowing down of the market. Coming out of the May long weekend, actually, is when I started to feel like showing requests were going down. The weather was getting really nice. We've been fortunate to have kind of an early summer happening here as well. So it's feeling a bit of a changing of the tides. I think that's definitely the case at this point. And today's rate announcement is going to further give a bit of a softening, bit of a dampening to the real estate market as we head into the summer. So one thing we have to keep in mind is, the reason the Bank of Canada raised the interest rate is, of course, yes, the GDP growth over Q1, but there was a lot of talk in the market that people were expecting rate cuts this year. People were definitely expecting the Bank of Canada to stand pat. There was too much optimism in the market. And the Bank of Canada, when they're trying to get a handle on inflation, they don't want optimism. So when they hear and they see indicators that people are expecting, example, rate cuts at the end of the year, they have to throw some instability into the mix. Stability is, they don't want people to feel as stable, essentially, the Bank of Canada. So I think this raise was more so, a 0.25% raise to say, look, what you thought was going to happen is not going to happen for sure. Rate cuts are off the table this year, and they stay true to their word this time, saying that, we're willing to raise interest rates further if we need to. So I think they felt the need to do it sooner rather than later to basically quell the optimism, keep the optimism at a lower rate, so people didn't go into the summer thinking that they should spend because rates may actually come down by the end of the year. So from a real estate perspective, I'm just going to talk about where we sit today. We just had May numbers come out, and from a Metro Vancouver perspective, we're starting to lean towards that 10-year average, and I'm starting to think that, the COVID real estate market, for a lot of people, because it's been such a long period of time, we feel like this has been a normal market, but things have been very different since 2020 versus the 10 years prior to that in terms of annual cycles of real estate, how real estate works with a busy spring market and a slower summer market, where interest rates are typically supposed to be. We were spoiled with very low interest rates and hence mortgage rates for a few years there. But now where we stand today, sales-wise, Metro Vancouver, we're hovering right around the 10-year sales average. Mortgage rates and interest rates, if you really look at it, you look at it over a long period of time, we're fairly average where we're sitting. This, again, to us, it seems very, very high because we had such a low rate during COVID, and I can go into all of the issues with that in this video, but I'm not going to. But we are closer to average rates. Inventory is kind of the outlier, I guess you could say. We are 20% lower than the 10-year average in Metro Vancouver for total inventory. But when you look at the new listings that hit last month, we were just over 4% lower. So we're starting to kind of creep back closer on that inventory from a new listings front. So average interest rates, mortgage rates, average sales quantity, starting to move closer to more inventory. Just this morning after the Bank of Canada announcement, I've already had one investor client with a rental property wanting to list the property. I do think we're going to see an uptick in inventory, a little bit more than we typically see in a summer. And that's another thing that is going back to kind of a typical sort of process, is we're having, that busy spring market, which is what we're coming off of, and then a bit of a softening in the summer. If you recall, when COVID hit, after that first little bit, we pretty much had a hot market through all the seasons. So it really changed the way that people thought about the real estate market. But what's happening now, what I believe, is we're just going back to average. We're going back to how it is. This is what the Bank of Canada wants. This is what they want for the economy. From a financial implication perspective of this rate hike, if you have a variable rate mortgage that has an adjustable payment, for every $100,000 that you have as a balance on that mortgage, it's about an additional $14 per month, payment wise, $14 or $15 per month. So, maybe easy for me to say it's not gonna kill a lot of people out there, this additional, but having said that, obviously we've had several raises. I think this is 9 raises now in the last 14 months or so. So obviously it's burning a hole in a lot of pockets. Investors are looking to move off of properties. I have a couple variable rate mortgages, so I've been getting hammered like the rest of us. But I truly believe that this is a signal from the Bank of Canada to get people to step back, to quell the optimism in terms of what's going to happen with the market. I'm going to stay busy. I think that for buyers, I have a couple buyers right now that are very financially strong. In fact, they don't need mortgages. So I've been communicating with them saying, look, I believe this summer is the summer of opportunity now. There's going to be some more listings. I know in the Fraser Valley, listings are up in some cases 20-30%. A lot of new listings happening in the Fraser Valley. I'm seeing detached home prices going to offer presentations, not getting offers, and then reducing prices. So you can no longer in this market look at the last sale and price yourself higher than that sale and expect to go for multiples. That's not going to happen. So again, if you're financially strong, of course, there's a window of opportunity for this summer. From a seller perspective, often seller timelines are dictated by external factors. So I think, again, we're going to see investors placing some rental style properties or investment style properties on the market, but there's going to be a little bit more of an uptick in inventory, in my opinion. Obviously, we're still way off total inventory levels, but I think this is going to be a good buying opportunity. I think that for buyers that are taking mortgages, I don't think the desired product that people have been going after is going to change very much. Most people are taking or looking at 2 and 3 year fixed products. Of course, I can't tell you what you should take. It's all based on your financial scenario, but I still think that's going to be the popular product. Fixed rates have been going upwards. I know the 5-year fixed rate is up into the 5s now. So yes, it's going to be tougher to qualify. I think the time to have the conversation with your lender, with your bank, is right now. So you know where you stand, and if you're going to continue viewing properties this summer, you're viewing properties that you actually have a chance of getting. So to wrap up the video, I just quickly want to talk about how we got to this place with the interest rates, because there's a lot of finger pointing that happens amongst the business community, the real estate community, just the general public. There's a lot of fingers that get pointed, for example, at the Bank of Canada and at the government for decisions they made to get us to where we are today. And I'm no apologist for the bank or the government, but when I look back at it, when this kind of all started, when COVID hit, you got to imagine you're a policy leader, you're running the country, and all of a sudden something that you've never seen happen before is happening on a global scale. Pandemic, we didn't even really know what that word meant back in 2020. So all of a sudden you have this this global health scare that's gonna kill a bunch of people. It's gonna affect so many lives, and now you're trying to make financial policy, and what you're telling people to do is you have to stay at home, don't spend money. Essentially, you're shutting down businesses. You're not allowing people to go out there and spend money and put money into the economy. You're shutting things down. When COVID first hit, the companies that would do well were the essential services, right? Like grocery stores, and then anything you could do from home, Netflix, Zoom. These were companies that did very well when the pandemic hit. But if you're a policy leader, you're with the government, for example, the Bank of Canada, you're literally telling people to crush the economy. So now you're in a bit of a tough spot. I think for a lot of people, if you're put in that position, you would probably decrease the rates as well, is my assumption. You would bring them right down. I think where the problem lies is the forward statements. I think that's where the issue began, is the encouragement to spend money and saying that rates were going to be low for a very long period of time. That was the problem. I don't think what they did was the problem. They needed to do it. At the same time, we started to see that real estate market really start to uptick July, August of 2020. And that's the thing, is that the Bank of Canada, they're numbers driven, they're financially driven, and they couldn't kind of factor in these behavioral changes that were happening with COVID, with people, staying home, work from home, and now I need more space, I need more room for my family, so I'm going to move eastward. I think it's the first time I had seen home prices in the Fraser Valley, detached home prices, appreciate at a higher clip than Metro Vancouver. So these are all kind of socioeconomic changes that happened in the market because of COVID that the Bank of Canada, I think, fell behind on. I think that the time to raise interest rates was probably much sooner than they did. Obviously, it's easy to look back and say this sort of stuff, but I think if we're going to look at, policy and decision making, we have to understand that they were in a position that has never been seen before. There was no precedent that they could go to and say, okay, doing these sort of measures is what's going to help this scenario. It's a very unique scenario. We are, entering a recession that may or may not hit. It's a different type of a recession where job growth is through the roof, yet we're heading to a recession. So again, I say this because there are no precedent for where we're at today. But the Bank of Canada rate announcement was, in my opinion, strictly just trying to tame the market, tame expectations, tame economists, what they were predicting to happen. And again, when it comes to real estate market, I truly think it's just going to be business as usual in the market. It's going to be a typical and average Vancouver real estate summer. So there you have it, guys. If you learned something in this video, I'd love it if you could hit the like button, because what that does is it takes the video and it sends it out to more people so they can learn from it as well. And if you enjoy these weekly videos, hit the subscribe button as well so you don't miss a future video. And if you're in the Vancouver area and you want to talk about your real estate situation with me one-on-one, there's a Calendly link in the description box below. So you can book me there for a call, or you can just give me a call or send me a text, shoot me an email, whatever works for you. I'd be happy to chat with you. But I want to thank you so much for watching this video this week, and I look forward to seeing you in next week's video.